everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, we entered into earnings season this week, and results were mixed. We had stocks down, mostly on news of earnings. We had Alcoa, JP Morgan Chase, Bank of America, and Google, all coming in line with estimates and falling on that news. And I hate to beat a dead horse, but again, with the dollar down being what it is, it just coming in line is not good enough. You got to beat earnings and keep up with the pace. We like to look at some certainties in the market. Let's take a peek. And we'll focus on three key areas here as usual. Number one, the US dollar and commodities move in the opposite direction. And that makes sense because commodities are priced in US dollars, and as the dollar falls, I would demand more of those weak dollars for that same unit of commodities, whether it's gold or oil. And point two, commodities and interest rates move in the same direction. And when I say interest rates, I'm talking about 10-year Treasury yields. Number three, high interest rates are bearish for stocks. That makes sense too because the operating expenses and cost of borrowing go up significantly for companies, and that cuts in on margins. And let's take a look at the US dollar. And the daily chart of the US dollar down below point 1 shows that the stochastics are oversold, and they continue negative, so we gave that a red mark. And up above, point 2 shows that we've got a long downtrend line which continues here. It's not looking good for the dollar. And a look at the MACDs and histogram bars. Point 1 down below shows MACDs are still declining, and the histogram bars, they continue negative too. Gave this chart a red mark. And up top, the relative strength index, it continues along sideways. It's kind of flat. Gave it a yellow mark. Now let's take a look at the weekly charts. And down below, point 1 shows that the stochastics, they're oversold, but they're giving another bearish signal. It just continues to look worse for the US dollar. Gave this chart a red mark. And we look too at the MACDs and histogram bars. Point 1 shows the MACDs are falling, and the histogram bars, they continue to be negative. Gave this chart a red mark. And up top, the relative strength index, it's in a downtrend. It continues lower. Gave this a red mark. Point 2 down below shows where we have some possible support near 74, and boy, would that be a relief. And so, summing things up for the US dollar, we analyzed the daily charts and the weekly charts. And on the daily charts, we found that the stochastics and the MACDs were negative, gave those red marks. Relative strength index was neutral, gave that one a yellow mark. Over on the weekly charts, we found that the stochastics, the MACDs, and relative strength index, all negative, all red marks. For a total, we had 5 red marks, 1 yellow mark, and 0 green marks for the US dollar. And we'll take a look now at the commodities represented by the CRB Index. And a look at the daily chart of the commodities. Point 1 down below shows that the stochastics, they've turned bullish, and the black line has crossed over the red. Gave it a yellow mark. We want to see this cross over just a little bit more. Hopefully that'll do this on Monday. But for now, we're neutral. We're going to give it a yellow mark, but we're optimistic. And over on the MACDs, the histogram bars, point 1 shows the MACDs, they're falling, and the histogram bars, they're negative, so we gave this chart a red mark. And up top, the relative strength index is moving higher. We like that, it's bouncing a bit here, but we gave it a yellow mark. And we'll take a look now at the weekly charts. And on the weekly charts, point 1 down below shows that the stochastics are overbought and they're converging a bit, so we gave it a yellow mark. And a look at the MACDs and histogram bars. The MACDs, they're still positive, but the histogram bars are slipping a bit, so we gave this one a yellow mark. And up top, the relative strength index is dipping a bit too, so we gave this one a yellow mark. And so, summing things up for the commodities, we analyzed the daily charts and the weekly charts. Over on the daily charts, we found the stochastics were neutral, gave them a yellow mark. MACDs and histogram bars, we found that they were negative, so we gave that a red mark. The relative strength index was neutral, so we gave that a yellow mark. Over on the weekly charts, we found that the stochastics, the MACDs, and the relative strength index were all neutral, gave them all yellow marks. For a total on the CRB, we have 1 red mark, 5 yellow marks, and 0 green marks. And we look now at the 10-year Treasury yield. On the daily chart of the 10-year Treasury yields, point 1 shows that stochastics are negative and they continue to decline. Gave this one a red mark to start things off. And a look at the MACDs and histogram bars, point 1 down below shows the MACDs, they turned bearish when the black line crossed over the red. And the histogram bars, they're negative too, as we're trading now below zero. Didn't like that. Gave this chart a red mark. And up top, a look at the relative strength index. We see that's continuing to decline. That's not good. We gave this chart a red mark. Let's take a look at the weekly charts. And on the weekly charts, down below, point 1 shows the stochastics, they're converging a bit here, so we issue a little caution here, gave this chart a yellow mark. And a look at the MACDs and histogram bars. MACDs, they're bearish, black line crossed over the red, and histogram bars are negatives, they slipped a bit too, gave this chart a red mark. And a look up top at the relative strength index, we see that it's trending higher, but it's dipping a bit too, so we gave this one a neutral yellow mark. And summing things up for the 10-year Treasury yield, we analyzed daily chart and weekly chart. And on the daily chart, stochastics, MACDs, and relative strength index were all negative. We gave them red marks. Over on the weekly charts, stochastics were neutral, gave them a yellow mark. MACDs and histogram bars were negatives, we gave that a red mark. Relative strength index, we gave a yellow marks, we found that was neutral. And for a total, we had 4 red marks, 2 yellow marks, and 0 green marks for the 10-year Treasury yield. And now let's take a look at the Dow Jones Industrial Average. And a look at the daily chart of the Dow Jones Industrial Average. Down below, point 1 shows stochastics. They're converging to the upside here. Could get a bullish signal shortly here. We gave this one a yellow mark. But it's a different story over on the MACDs and histogram bars. Point 1 down below shows MACDs. They're bearish, and the histogram bars, they're negative too. Gave this chart a red mark. And up top, the relative strength index, that's beginning to turn up too. Gave this one a yellow mark. Also, down below, point 2 shows the volume is starting to pick up a bit too, so we've been waiting for something like that. This could be a sign. We'll have to wait for this week to see what kind of action we've got. And let's take a look at the weekly chart. And on the weekly charts, down below, point 1 shows stochastics are overbought and they're beginning to tire a bit here. Issue a little caution here. Gave it a yellow mark. And down below, MACDs and histogram bars. MACDs turn negative as the black line crossed over the red one. And the histogram bars, they're negative too. Down below, we see that that's trading below zero, so we gave this chart a red mark. And up top, the relative strength index is neutral. It's been trending a little bit sideways here after bouncing. Gave this a yellow mark. And summing things up for the Dow Jones Industrial Average, we analyzed the daily charts and the weekly charts. On the daily chart, stochastics were neutral, gave them a yellow mark. MACDs and histogram bars were negative, gave them a red mark. And the relative strength index was also neutral, so we gave that a yellow mark. Over on the weekly charts, looked much the same. Stochastics neutral, gave them a yellow mark. MACDs negative, gave them a red mark. Relative strength index also neutral, gave those a yellow mark. And for a total, we had 2 red marks, 4 yellow marks, and 0 green marks for the Dow Jones Industrial Average. And so we've been coming up with scores for the U.S. dollar, the commodities, the 10-year Treasury yields, and Dow Jones Industrial Average, trying to find where the strengths are and where the weaknesses lie. We did that by weighing the number of positives versus the number of negatives and coming to a conclusion based upon that. And for the week, we found that the CRB Index was in first place. We had 0 green marks, 5 yellow marks, and 1 red mark. That's slipping a little bit since last week. And number 2 this week, we've got the Dow Jones Industrial Average. We have 0 green marks, 4 yellow marks, and 2 red marks. And coming in third place this week, we've got the 10-year Treasury yield. We've got 0 green marks, 2 yellow marks, and 4 red marks. And in last place, once again, and continuing for several weeks in a row, is the U.S. dollar. Again, we've got 0 green marks, 1 yellow mark, and 5 red marks for the U.S. dollar. And so we take a look now at our market gauge. The object here is to be as far in the right column as possible in positive territory, and as far away from the left column in negative territory as possible. And this week, the 10-year Treasury prices came in first place. We didn't show that on the other charts. That's the inverse of the 10-year Treasury yields, which we see down below. And coming in second place would be the CRB Index. We found that was neutral, but it was slipping a lot as it was positive last week. Dow Jones Industrial Average slipped a bit too, as it was neutral last week and is shifting a little toward the negative side. Doesn't look serious though. 10-year Treasury yield moving yet lower. It was also in positive territory with the CRB Index last week, and that slipped even further from the commodities. And the US dollar once again lagging the pack in last place. Negative, as you can see here. Continues to look worse for the US dollar. Hopefully we get a little support at that 74 level. Gonna have to wait for this week to take a look and see. Coming up, we're gonna have the IBD 50 portfolio. You're not gonna want to miss that. That's exciting. We've got a interesting pack this week. A new addition to the portfolio coming too. As we know, one of the stocks in the portfolio gets sold every week, and that's the worst performer. And a new stock is added to the portfolio. Stay tuned. And we'll take a look now at our IBD 50 holdings for this week. Starting out the week, we had Tempur Pedic last week coming in first place. Starting the week here at $57.17. Second place last week, Endo Pharmaceuticals coming in the week at $40.85. El Paso Pipeline comes in third place every week, $36.71. Continental Resources surviving the portfolio, the original stock in the portfolio, $70.87 starting out the week. And a new addition to the portfolio is Speadtrum Communications. Picked that one up last week, 117 shares at $20.35. Got total cash in the portfolio of $123.67. Overall, we're up just under 15.5%. Let's take a look and see how we did. And coming in, number one this week, for the second week in a row, it's Tempur Pedic. Opening the week at $57.17. We closed the week at $57.80. Not a very big week this week for the IBD 50 portfolio. Is number one stock here. Total gain of $28.98. Let's take a look at the chart. And on the chart of Tempur Pedic, down below, 0.1 shows stochastics are overbought and they're converging a bit. Gave them a yellow mark. And above that, 0.2 shows the MACDs are positive, but they're overextended. And the histogram bars, they're declining a bit too, so we gave this a yellow mark. And up top, 0.3 shows the relative strength index has been going sideways, so it's been flat. Gave that a yellow mark too. Good news is, for Tempur Pedic, after this big gain we had last week, we have not gone down to profit taking. And coming in, number two this week, it's Speadtrum Communications. And it's a new addition to the portfolio, opening the week at $20.35 and closing the week at $20.51. $18.72 increase to the portfolio, and good enough for second place. And I'm optimistic about the chart of Speadtrum Communications. Down below, 0.1 shows stochastics, they're reaching higher in overbought territory. And 0.2 above that, the MACDs are rising, and the histogram bars, they're lifting too. Gave them both green marks. And up top, the relative strength index is showing signs of improvement too, as it is also trending higher. Gave that one a yellow mark. Want to see that lift a little higher before we can go green on that one. Overall, things look pretty decent for Speadtrum Communications for this week. And coming in, number three, this week, it's El Paso Pipeline. And it's like I said, third place every week is the home for El Paso Pipeline. I'd like to see it do a little better, as we started the week at $36.71, closed the week at $36.51. Total loss of the portfolio of $11. Nothing major, but we want to see gains here. Let's take a look at the chart. And a look at the chart of El Paso Pipeline. Down below, point 1 shows stochastics are beginning to turn positive. We like that, but want to see a bigger move out of it. Gave it a yellow mark. And above that, point 2 shows that the MACDs are converging and histogram bars are flat. Gave that a yellow mark. And up top, the relative strength index, it may be turning back here, so we gave this one a yellow mark too. Neutral status for El Paso Pipeline. See if we can get out of this little funk of third place next week. And so that only leaves room for one more stock in this portfolio. One of the stocks will remain in the portfolio and the other is going to get sold. First stock up. It's Continental Resources, the original stock in the portfolio. Last week I had said that I thought it would wind up in the 4th place spot again. This is where it was then. And the second stock. It's Endo Pharmaceuticals. Only been in the portfolio for a couple weeks. Coming in. Number 4. And remaining in the portfolio, it's Endo Pharmaceuticals. And knocking out the original stock in the portfolio, Continental Resources. We started the week at $40.85. Closed the week at $40.21. Total loss in the portfolio, $33.28. Let's take a look at the chart. And down below, point 1 shows stochastics are negative, gave them a red mark. And point 2 shows the MACDs are flattening and the histogram bars, they're also falling, so gave that a yellow mark. And up top, point 3 shows the relative strength index is turning up a bit. Gave that a yellow mark too. Well, you know, Endo Pharmaceuticals is a better performer. You know what's going to happen to this stock. It's going to get sold. And so Continental Resources is out of here. The last original stock in the portfolio opened the week $70.87, closed the week at $65.95. Total loss in the portfolio this week of $157.44. Let's take a look at the chart. And on the chart of Continental Resources, down below, point 1 shows stochastics are trying to turn higher. Gave them a yellow mark. Point 2 shows the MACDs, they're dropping, and the histogram bars are negative. Gave them a red mark. And up top, relative strength index is downtrending. Gave that a red mark too. Overall, I'm happy to be out of Continental Resources, as this thing's been all over the place since we got into the stock. And final results here for the IBD 50 holdings. The performance of this week, Tempur Pedic, first place, $28.98 gain there. Speadtrum Communications, the new addition to the portfolio, second place at $18.72. And El Paso Pipeline coming in third place every week with an $11 loss. Endo Pharmaceuticals, $33.28 loss there. And Continental Resources finally bumped out of here. $157.44 we lost there. We've got cash in the portfolio of $123.67. And so we'll get a new stock for the portfolio this week. And that stock is Corp. It's another Chinese internet company. Must be hot in that sector, closing the week at $124.56. Got a market cap of $7.68 billion. Average daily volume, 3.5 million shares. Let's take a look at the chart. And the chart of Cena looks pretty good. Point 1 down below, stochastics are lifting higher. Gave them a green mark. And point 2 above that, the MACDs, they look strong. Histogram bars, they're increasing too. We like that. We gave it a green mark. And up top, the relative strength index seems to be picking up too, so we gave that a green mark. We like Corp going forward here, as I think this is going to be a big contender coming up next week. And reviewing the IBD 50 holdings going into this week, we have Tempur Pedic, our first place winner. Second week in a row, total value $2,658.80. Last week's new addition to the portfolio, Speadtrum Communications, $2,399.67. El Paso Pipeline, the senior stock in the portfolio now, Picked that one up February 11th, $2,008.05. Endo Pharmaceuticals, starting out the week with a total value of $2,090.92. And this week's new addition, Cena Corp, picked up 17 shares of that stock, starting it out at $124.56. Total value there of $2,117.52. And we're carrying $116.55 in this portfolio in cash. Total value, $11,391.51. Overall, we're up about just under 14% for the portfolio, starting out from January 28th. It's looking pretty good so far. And this week, analyzing the IBD 50, I found several stocks worth looking at. Picked Cena Corp just because it looked better on the daily charts and the weekly charts, so we're expecting a lot of good performance out of that stock. I'll report on several of the other stocks as we go throughout the week. If you want to know more about that, just subscribe to me on YouTube here, and you'll get information whenever I post the new video here, and I'll have several stocks to talk about. And also, check back here if you're looking on the website, wealthguardshow.com. Be sure to tune in every week. And these stocks have got to perform this week, or else you know what happens. They're out of here.